Good day, everyone, and welcome to the Digital Frontiers Institute's quarterly masterclass. I am Titilola Feyijimi, your facilitator for today's session. I'll just introduce myself briefly. I am a digital MSME finance subject matter expert with several years working with last mile MSMEs across Africa, spanning both consumer goods and the fintech space. Today's session is titled From Credit to Confidence: How Digital Savings is Powering Women-Led MSMEs. And I'm hopeful that we can together explore how digital savings, though often underutilized, is emerging as a powerful financial gateway for women-led MSMEs. Just a few housekeeping before we get right into it. Please mute your microphone so that we don't get caught in any background noise. To speak during the presentation, use the chat box or the raise your hand function. And finally, do take note that this session is being recorded. Our discussion today will be centered on a few key themes. The first will be unpacking the shift from credit-heavy models to more holistic digital finance options, specifically savings, and we'll prioritize the resilience of digital savings and its long-term financial gain for women-led MSMEs. Next, we will take a gender lens on savings and explore why digital savings is becoming a safer and more sustainable entry point for women, especially compared to traditional credit-led options. And finally, we'll expand on the behavioral preferences of women-led MSMEs, especially around trust, their trust and their preference in informal financial systems like AjoCard, Esusu, Tontine, and Chama, and how a couple of digital platforms around Africa and the globe are now embedding these culturally familiar practices into their fintech solutions. My intent for this masterclass is that it's both insightful and interactive. So please feel free to put any comments in the chat box, questions as we go along. Thank you very much. We'll dig right into it. I'd like to take a few steps back and zone out. For anyone in the MSME space, we know that globally, MSMEs contribute over 70% in terms of employment, 90% globally in terms of businesses, and in emerging economies, especially in sub-Saharan Africa, West Africa, where we are located right now, MSMEs contribute as much as 40% to the GDP of our communities, our economy. And it's important to take these numbers into context, especially with respect to some of the economic, both the micro and the macroeconomic forces that we are dealing with. We're dealing with hyperinflation in most countries, a hike in fuel and power costs. And yet SMEs are still appearing, or they're still positioning as the lifeblood or to most of these economies. Another thing to note is the finance gap. We see a whopping $5.2 trillion in terms of the global finance gap, and specifically for Africa, we see a number that is around 330 billion. These are huge numbers. And I think, when we put it into context, I mean, sometimes we hear these numbers, but it's important to kind of bring it back home and interpret these numbers, to our reality. These numbers translate to not just millions of SMEs that are, out of reach for credit, but it also means that only 1 in 5 SMEs have access to formal credit. And this means that when you go into a shopping mall, like a ShopRite, irrespective of how great these stores look like, only 1 out of 5 of those stores on a row has access to credit. When you go into the open market, the scenario is even more dear because we all know that as you get closer to the bottom of the pyramid, as you get closer to being rural or underserved, you're locked out even greater. So behind these numbers, we see millions of SMEs locked out. It's also important to note that a lot of these SMEs are women, and these women-led SMEs are facing layered barriers beyond just the numbers. They're facing structural, they're facing social, they're facing institutional barriers, a lot of which we will touch on in the course of this session. But let's first get into the crust of the matter, which is talking about this old story, where traditionally we're told that for SMEs, it's credit first. For years, credit has been sold as the go-to solution for SME growth. And the thinking is always, give them a loan, give them a grant, and growth or skill will follow. The very sad truth is that access doesn't always equal empowerment. And we see this play out over and over again. And, the essence of this masterclass is to explore, a more viable option. I think at this point, I'll just, like to paint what credit first really means, right? Because it's not so much saying giving a loan is the wrong thing to do, but it's giving a loan first. Is that the right thing to do, especially for women-led MSMEs? Is that the right phase of supporting this particular segment of MSMEs? And so I'm going to paint the typical credit first MSME picture. An MSME will apply for a loan without any safety net. And when I'm talking about, when I mention a safety net, I'm saying the MSMEs might not have any savings. Their cash flow might be irregular. They might not have access to any form of collateral. And then this MSMEs, when they're offered this credit first option, they face significant, double-digit interest rates. We see as high as 25, and in some instances, 40% in terms of interest rates. And this is not just from institutional financial bodies, but even digital financial setups will, oftentimes, because of the cost of their capital, exact, double digits in terms of interest rates. And even more, disheartening is also the rigid repayment terms. I work in this space and I see this happen real time, the real reality. It's not even just the high interest rates. There are many a times that the high interest rates is a norm and it's accepted. But even more disheartening is the rigid repayment terms. For a a micro MSME or a medium scale MSME, that depending on their revenue inflow, the revenue inflow might be daily, it might be weekly, and then you have a repayment term that is not aligned to, it's not well matched to their revenue inflow. And this in itself, is an issue, it's a constraint. And in all of this, the consequence, for both sides is the high rate of default. For for digital financial solution providers, this is not a good thing, the high default rates. And on the flip side, for the MSMEs, when you default, you're almost automatically, painted with a red brush, and it stifles your ability to subsequently, get credits, and it just banishes that particular MSME as being credit worthy. I think, this picture hopefully, unmask what the real problem is, and it highlights the fact that credit first models prioritize debt, and not so much resilience or sustenance. A lot of times they assume a readiness from this women-led or MSMEs, a readiness for debt, often ignoring the need to build stability first. And specifically for women-led MSMEs, who are more likely to operate informally and often lack financial and social capital, this approach can be very damaging. And so this brings me to the very next thing that I think that we need to talk about, and some of which I have already touched, is looking at the unique challenges that women-led MSMEs face. Now, in talking about challenges, I think oftentimes when dealing with MSMEs and women-led MSMEs specifically, we kind of talk about these challenges from a high-level perspective. We talk about challenges that are pretty much obvious, a lot of which I have already, highlighted, limited or non-access to collateral, low financial literacy, very informal means of, keeping records of their books, and just the high stress that debt, and repayment brings to the table for this women-led MSMEs, But the truth of the issue is that these challenges that I have mentioned, I've aforementioned, are not unique, to women-led MSMEs. These are pretty much general to all MSMEs. Although what we see is that even though both women and non-women MSMEs might face the same challenges, a lot of times the outcomes, specifically for women-led SMEs, because of some additional unique barriers that we would, that I would talk about now, the outcomes are usually very different. So even when a woman that is facing the same low financial literacy issue, steps into the arena, what you would see, because she carries even other unique barriers that a lot of times we don't talk about, a lot of times we don't highlight, a lot of times we don't take into consideration when we're building tools, or resources for them. We don't take this into consideration. We find out that their outcomes are very much at variance with their male counterparts. And so beyond the surface levels barriers, I'll be talking about three key unique barriers. I'll be looking at these barriers from three key dimensions. The first is psychological. Now, why do I say psychological? I think for women, and I think, the women on this call can attest to this. After years of some level of exclusion, even as a girl child, right? Inherently, carry some level of self-doubt. And for many women, this applies to financial services. This applies to their lack of interest in participating in formal financial instruments. Even walking into the banking hall is oftentimes a very tall order. It's quite intimidating for micro, small, and medium enterprise owners. The second dimension is environmental. And this is, very critical. This is something that we see on day-to-day in the line of work that I do. Women can't simply, especially women in the micro, small, scale enterprise space, they have a limitation in terms of time. Most women are juggling business and unpaid care work. They're homemakers. They have responsibilities with their extended family. They have responsibilities, in their church families. Women are constantly, dividing themselves across, a mirage, of spares, and so taking out half a day to go into the bank to engage and understand the requirements for some of this credit-led options is simply not an option for them. We also know from research that women are most often excluded in terms of access to tools such as smartphone. A lot of women are sharing their smartphones with either their children or their partners. And a lot of women also do not have access to, a digital ID or even any physical ID, And so this is, a major, barrier that is peculiar to women. And then finally, I've kind of touched on this when I talked about collateral, and the lack of collateral. In many communities, women, need male approval to make financial decisions. They need male oversight. So culturally, in some cultures, women are excluded from inheritance. Women cannot make unilateral decisions on their own, and this is a lived, experience. In regards to the work that on two scenarios, I can cite examples when we had gone to the field and spoken to women, that were, say, small scale, enterprise owners, women that had retail stores within open markets and were doing, at that time, millions of naira in terms of stock in and stock out, But when we begin to have conversations, about financial decisions, you see that hesitation. And we've had instances where these women will tell you, I have to have a conversation with my husband, and that takes another 1 or 2 weeks. I have to have a conversation with my pastor, and these are all male figures, and this is because of, our cultural, just the way we are culturally wired. And so we must ask ourselves, why is it important to look at, our females, and their barriers specifically. And this is because we need to be able to answer, why don't women access formal finance? And a lot of times it's because our formal financial models are not designed for us. I think that true inclusion begins by understanding the barriers to women coming on these platforms, understanding our realities, and this is beyond the obvious, and it goes further to designing financial solutions that are not just accessible, but are also affirming, to the unique barriers that pertain to us. Now, we'll take a shift now. We'll dive in now to exploring digital savings as a gateway. We've talked about the constraints, we've talked about the landscape, and I think when we build around the unique realities that face women MSMEs, what we see is that digital savings is an emerging, powerful financial gateway that is also culturally aligned to us. At the heart of this shift, as I've said, is looking beyond credit first and considering digital savings. Unlike traditional credit pathways, digital savings offers a safer, more accessible entry point. It allows women-led MSMEs to build a buffer. It allows them to manage risk. It also allows them to become credit ready, without the burden of debt from the onset. And this approach builds, trust, which is really important. I think that in the financial space, trust is the key currency. And with digital savings, what you do is you build trust, not just internally, boosting confidence in managing money and risk, but it also builds trust externally by generating almost an audit trail of their credit history, because as they save, you begin to capture a credit history over time that would put them in a good stead. We're also seeing that this shift plays out across major platforms. Platforms like Piggyvest, Tala, and Twala are leveraging this shift, and they are embedding features such as behavioral-based savings tools rooted in this informal saving habits. They're building in flexibility such that people can start small and grow, and they're giving the benefits of allowing women-led SMEs to migrate from savings to credits, and then even further down the line into other financial products like investment. I think it's important to talk about this shift because it reframes the question from how do we lend to the poor, how do we lend to the underserved, to how do we empower, how do we empower women-led SMEs, especially in the underserved space, how do we help them to grow and scale, especially, on their own terms. Now, I'd like to take, a slight breather and explore some of the things that we have talked about, leveraging this case study. It's going to be an opportunity for us to it's an opportunity for me to engage. And the case study scenario is thus, putting yourself as a product lead. You've been tasked to design a savings first product for a women vegetable trader in peri-urban markets. what features will you include and why? So my colleagues from DFI will be facilitating this, but please, I would really encourage that we kind of, put our thoughts in the chat box, and also take into consideration some of the themes that, I've already discussed. Any feedback?
So I'm on standby, but right now we do not have any questions.
Any feedback on features that people might consider?
Okay, so Aldous from Mozambique says, I would include USSD feature to make the product easy to use.
Okay, any additional features?
Okay, so Isa, I think Isa is still typing. For feature to consider are
So just give everyone another 1 or 2 minutes before we...
So Evelyn says an educative function. Jane Chat from Nigeria, offline features are great, especially here in the global south. Toby C says an app that includes an accounting page to track costs and revenue.
Very interesting.
Lastly, I have MEC daily visit to her. A daily visit.
Features. Does anyone have any features that speak specifically to women-led MSMEs? Considering this is a product for women vegetable traders in peri-urban.
So Rashid, develop an army of women-owned existing businesses as agents for cash on and cash out, account initiation, relationship management, build trust with iterations of what works.
Interesting.
Let's hear also Isa, compulsory savings to create the habit of saving. I would also include a bonus to encourage the saving. I will also add a level training on what savings is all about. And then we have the last one from Barbara. I will put in a feature that allows them to commit to saving a consistent amount of money at fixed periods.
Very good. Very good. Interesting. Thank you very, very much for the feedback. Thank you very much. I think this will be a good segue into talking about 3 case studies. And I think it's interesting that some of the features that have already been highlighted, you would hear, how in real time digital fintech firms are implementing. So let's start with a platform called Piggyvest. It's a platform from Nigeria, and it's especially quite popular with young, informal, women-led MSMEs. A lot of women in the 9 to 5 that have side gigs that are slightly more educated, leverage Piggyvest. A lot of them sit within the small, medium MSME space. what makes PiggyVest stand out isn't just its app, it's how it mirrors familiar informal models like Ajo, Susu, Tontime, Chama, and then layers on discipline, structure, and flexibility. We've talked a lot at length. Um, um, I would just highlight, some of the specific features that PiggyVest leverages, and we see that almost intuitively, the attraction, is to female. One is goal-based savings, so users can set specific targets. We see that, in the traditional savings model, a lot of times a group of friends or a group of women, even within the open market, will set out a target and save towards that target, whether it's opening a store, restocking her shop, setting something aside, to send her kids to school. A lot of times savings is goal-based, and PiggyVest is leveraging this. It's also leveraging the psychology of the high you get when you set a target, and you achieve it. Auto debit from a wallet or a bank. For women, it takes one additional thing off her to-do list, because once she sets the target at the beginning of whatever period, a period that she can align with her revenue inflow, the system just automatically debits. Locked savings options. So it's the ability to set aside, you've saved a bucket of money, or you're saving a bucket of money and you don't want to have access to it. This platform is able to provide a locked savings option. And then finally, in terms of the UI UX of the PiggyVest, it mimics the Ajo, it mimics the Tontine, the Chama, the traditional way of savings. So you can see that intuitively, the features that PiggyVest has embedded in its platform is responding to both the emotional, the psychological, the barriers that we had talked about that are peculiar to women. And you see that a huge chunk of their user base are women. It's also keen into the traditional mode of savings, which, is not debt first, and so that keys into even the cultural constraints or the cultural context for this women. The second case study that we'll delve into is from Kenya, where Tula is transforming how women, smallholder farmers, access and afford agricultural inputs. It's designed for users with seasonal income, so almost upfront, it's aligned with understanding the revenue cycle for these women. So it's designed for users with seasonal income, informal operations, and limited digital access. Tula uses layaway savings and mobile first approach to make farming more financially inclusive. Some of the features, as we have mentioned, mobile layaway for farm inputs. Farmers save in small amounts towards seeds, fertilizer, very similar to PiggyVest. It's somewhat target based. Input delivery is timed, so inputs are delivered right on planting season. So it takes into cognizance, because these are smallholder farmers, it ensures that the inputs are delivered at the right planting time. And this, also takes into reducing the stress especially critical for women that are juggling, multiple roles. It's integrated with an agric marketplace. Farmers can buy directly from verified suppliers, cutting out the need for travel and price negotiation. It is also SMS based. Somebody in the chat had already mentioned that as a feature, and we see this embedded in Tula. It matters that Tula does not ask women farmers to adapt to fintech. It adapts fintech to what they're doing. It adapts to just the way they conduct their day-to-day operations by aligning the financial tools embedded with seasonal, informal, and cultural rhythms of rural agriculture. Tula removes both the environmental and cultural barriers that we've talked about, and it proves that when solutions meet women where they are, digital savings can unlock efficiency, choice, and dignity, even within the last mile context. Our last case study is global. It's called Tala, and it has a presence in Kenya, in the Philippines, in India, and Mexico. Tula is taking a bold approach, revamping who gets to be considered creditworthy. I think Tula is one case study that I think is really noteworthy, because a lot of times we talk about, especially for credit-led options, we talk about alternative means of scoring creditworthiness, and Tala is one app that has been able to leverage using alternative data. Tala has opened up doors for women-led MSMEs in these countries who've been long shut out of formal credit systems because they do not have the documentation, or they do not have even any way of tracking. They're very informal businesses, simply because, either they lack, business documentation, as I've talked about, or even collateral. Some of the features that Tala has on the app is, as I've mentioned, alternative data credit scoring. Instead of relying on traditional credit bureaus, Tala uses data from phone usage, payments or saving habits, and behavior to assess risk and unlock access. It allows people to start small. So you begin with a modest amount, helping people build trust and repayment confidence and a credit history over time. It's an app that is built on instant decisions. So loans are approved in minutes, removing, the intimidating stance that banks often have. And, rates are transparent. A lot of the rates are set for daily repayments. And this is flexible. So it's designed to reduce fear, and not punish mistakes. It encourages repeat use and long-term growth. I think that Tala's biggest strength is the psychological empowerment that it gives to its users. For many women, it's the first experience they have with, any kind of credit line, and it dismantles the harmful narrative that women are not credit ready, right? Because it kind of builds that competency and confidence. And it also leverages data, so it's very affirming. If you have the right behavior consistently over time, you will get the reward, as opposed to sometimes with other credit options where you feel that you're doing everything right, and at the end of the day, you still get denied of access. So we will kind of round up the masterclass by just talking about the confidence loop. It really brings together, a lot of the aspects that we've talked about. It builds on building trust through informal means and leveraging that to transition to more formal models, like digital savings. Credit accessibility is more visible via transaction data. We see this play out with a scenario with as Tala. You have access to responsible credits, so this is not credit that is set up for your failure. This is credit that is set up to sustain your growth, to build sustainability at the end of the day. And we see evidence of this, across a number of projects across the globe. We see this play out with Metro Manila, where 37% of women-led SMEs saw improved capital cycles with digital savings. We see this in India with almost 1 million plus women-led MSMEs digitalized since 2022. We also see this impact even in Nigeria, across states, on a women-led project by World Bank and Gates Foundation, where a huge group of women across northern Nigeria, leveraging digital savings models, are able to aggregate funds and extend credit across a significant number of women in the north. I will like to bring the masterclass to somewhat of a close before we, I give a chance for questions by just talking to some of the reflections and call to action. I think that digital savings, is one that digital service providers should invest in. We should see a hike in investment in savings-led product design. We need to see a lot more institutional players in the ecosystem designed for the informal realities around women-led MSMEs. We need to also build around behavior and not just transaction. I hope that there would be more collaboration across all the players in the ecosystem, so that we see systems that are built, as fit for purpose, specifically for women. So with this, I kind of bring the masterclass to kind of a close. I'm open to questions or additional contributions. Thank you very much for your time.
Thank you, Titilola. So let's see if there are any questions. So I think the one in the it's not a question, but it was just responding to your case study earlier of I would include a feature that integrates MFI features for groups to easily access formal, which formal means which in turn will promote women inclusiveness. Um, and then we had a hand up earlier on from Rashid Galgado. If you would still like to talk, please raise your hand and we will accept you shortly. Let me see in the chat. Uh, so one question in the chat, how long did it take to design and launch these products? Question from Luna.
So, I mean, a lot of these products have been in existence for a while. I work within that space. I think that the mindset is iteration. So a lot of times you will bring, take to market a certain version, and based on use and feedback, you see that additional features are added. So a lot of times at the onset, you would rarely see this platform have the full portfolio of features that I have mentioned. A lot of times you would see these features evolve over time. Yes, so it's an unending journey. As you know, I mentioned in our discussion, what we're seeking to do is migrate women from savings to credit, and then the optimal space is investment. And as you take them through this journey, you will continue to add features based on their peculiarities and their feedback too.
And Rashid Galgalo, the floor is yours to ask your question. If you are speaking, we cannot hear you. I do see that you are unmuted, but we cannot hear you. Okay, maybe it's a network issue. So let's go on to the other question. So a question from Isa, how do you deal with regulation from the central bank?
So regulations differ depending on the country. I will speak specifically to the Nigerian environment. Savings, in order to be able to take savings, especially in the fintech space, you would require specific licenses to facilitate that. Very different from payments or a POS license. And oftentimes, a savings platform is looked at as pretty much a light version of a bank, of a digital bank. The license that we leverage in Nigeria is the microfinance license, which has several tiers and different requirements that gives you the regulatory oversight to be able to receive deposits or savings, as the case may be, from users. So I think the onus will be on a player to kind of work with the regulatory body within their environments to understand how it is classified and ensure that you follow through with the requirements. I think that this is important because of trust, and because of the very unfortunate environments where they're even in the traditional space, a lot of instances of fraud situations. So, I would always encourage that we toe the line of working with regulators and ensuring a good understanding of where it falls into, and following through with getting the appropriate licenses, as the case may be.
Before I move on to our next question, I would just like to read Rashid's comment that he wrote in the chat. Maybe he wanted to elaborate on that. So he said, Ayuto, informal savings for Somali women. In Somalia, many women participate in an informal savings group known as Ayuto. This is a rotating savings and credit association where a group of women agree to contribute a fixed amount of money regularly, for example, monthly or weekly. And each time the total amount collected is given to one member of the group, rotating until every participant has received a full share. So maybe Rashid wanted to just elaborate on that. Then our next question.
Thank you, Rashid, for that contribution. I think that's very similar to what we have in Nigeria called Ajo. I mean, I know that in Ghana it's called Susu, and in most French-speaking African countries or French-speaking West Africa, it's called Tontine. So I think, it's, and I think that's the beauty when fintechs key into, what is already a known behavioral pattern for us. You almost get over the initial hurdle of trying to sell the idea, because it's something that is, already innate within, our cultural constructs.
And then Rashid also sent a question: what would be the minimum viable product that can be used to test saving for women-owned businesses?
I think it really depends. I think it really depends on what the end goal is, right? So if at the end of the day the end goal is credit, a lot of times your minimum viable will be maybe 3 or 5 times what you're able to collect, right? And so I think that in terms of setting those KPIs, those metrics, it really depends on what your end goal is, or what segments of the MSME divide you're engaging with, and what type of capital ticket price, the needs are. A lot of times women are not able to save as much as they need, and so savings is really a buffer. So you're saving a certain amount, you're for the financial service provider, you're understanding the patterns and the behaviors, and then you're able to extend credit at a multiple of what is being saved, right? So it all depends on a number of things that you have to assess, that it will be specific to your scenario.
Okay, great. And we have a question from anonymous attendee about incentivizing behavior and not just transactions. How do you actually put that in practice?
There are a number of ways that this is already done, and one I've just mentioned. One is how you unlock additional benefits on the platform. So behavior can be rewarded by how quickly you're able to move from savings to credit. Behaviors can be incentivized or rewarded, by the ticket price in terms of how much you're able to borrow. So you start off with a certain amount, And if your behavior is to this extent, you can almost borrow 3 times that from the gate, or you can borrow only double of that. So there are different ways that you can incentivize. You can also incentivize with extending other adjacent financial services to this group. We talked about how in the credit-led scenario, women have to go into these arrangements without any buffer, right? And when there are volatilities in the market, whether a disruption in supply or some issue, they simply do not have any safety net. So one of the ways that some platforms have been able to incentivize is extending insurance, ensuring the goods that this women-led SMEs have, based on how well they have shown an affinity to the right behavior on the platform. So there are varied scenarios, in real life on digital products and the likes that kind of share the ways that we can incentivize.
And is the insurance portion on the product compulsory?
No, it's not. It's not compulsory. It can sit as a standalone, or it can sit as a bundle, or it can sit as an add-on as a benefit for right behavior.
Great. And then we have the last question. You mentioned behavior. What tool do you use to study your customer behavior?
I think that data is one. Just having consistent ways of tracking your data, tracking deposits, tracking withdrawals, tracking the day of time withdrawals happen. We see a scenario where towards this time of the month, as the month begins to round down, we see huge withdrawals on our platform for savings, and this ramps up, at the early period of the new month. Sometimes you see the circles play out in the course of the week, depending on how your savings platform is set up. So I think that as you observe, as you're consistent in capturing real time, especially for digital platforms, as you are consistent in capturing real time data, and leveraging visual, or data analytic tools, you can see very much, the data will literally speak to you. There are things that would happen and the data will speak to you. But I also highly recommend, having the attitude of going into the field and engaging one-on-one, be it just in-person focus groups where you sit down and have one-on-one conversations and you just let them talk and vent and give you feedback, or even more structured, qualitative types of group research. But yeah, I think definitely leveraging data and some of these other methodologies will help you understand behavior quite strongly.
Okay, great. Then we have just one more question that came in now. What type of data did you collect? Was the user aware about it?
Sorry, can you repeat?
What type of data did you collect? Was the user aware about it?
Yes, in Nigeria and in most countries, data privacy is key. So data that is captured are data that a lot of times are stripped of identity. So they're nominal data. So when you're viewing this data, it doesn't it doesn't come attached to people's identity, and there are tools that you can leverage to pull out this data, normalize the data, and be able to interpret the data without any risk of singling out, any user face data. In line with GDPR privacy laws.
So that was all for the questions that we had. We have no more questions. You can conclude the webinar.
So I just want to use this opportunity to thank everyone that logged in from the different parts of the globe. I hope that this session was both insightful and engaging, and that you took one or two things away as as we build towards ensuring that the resources, especially with respect to women-led MSMEs, are really fit for purpose and in line with, some of the talking themes that we've addressed on the call. So do have a very restful weekend, and thank you very much for your attention.